Alright, so we're just going to do this bar by bar. Okay, so what I'm looking for here, pay attention down here in the slingshot, not slingshot, pay attention down here in the trigger. That is what's going to actually trigger the trade, alright? You're not going to have a trade unless you get into the overbought or you get into the oversold. You're never going to have a trade if you don't get into one of those. Alright, so pay attention to what's going on down there. Now, right here, the current bar, you can see, oops, hang on, the current bar, right there, that's not the current bar. If we go all the way to the end, we'll go all the way to the end. See, this down here right now is, it's not anywhere, it's right in the middle, and up close right here you have it you have a red background, but an up close on the current bar is going to put you up here too far away from the midpoint. Alright, remember these are 19 range bars, so you could be looking 5 points away from the top of the bar. If you have a close that is 5 points further, 5 points above the top of the bar, more than 5 points above the top of the bar, then that bar is not going to give you a trade. Right? That bar won't give you a trade, because if you get a down close on it, it's going to be above the midpoint. You're not going to trade it. Right? So you wait. Next bar didn't make it into the overbought, you got nothing. You're waiting for it to get into the overbought. Next bar is in the overbought. So now you're in the overbought, and if right now, excuse me, if right now, yeah, let me take a drink. That's what I meant about my voice going. If right now, the next bar were to open right here and close down and bring it out of the overbought, that would be a trade. If the next bar were to open right here and go up and close at the top, you'd have no trade. If it were to go way up and then close down and stay above the midpoint, you would not have a trade. Alright, so what you're hoping for right now is the bar is going to open, go up a little bit, then go down and close right here, right below the midpoint. The closer to the midpoint, the better. Now think about that, okay? When you get the close on the other side of the midpoint, the closer to the midpoint, the better, because you want it to get down here. So the closer it is to right there, the further you have from there to there before it finds its first level of support. Do you all get that? Does that make sense? So I don't know how it actually happens, but I know the next bar is gonna close right there. That's pretty good, alright? It went up some, and then it went down and closed right here. That's a good spot to trade right there. Now, I don't know what happens after this, but that would be a good trade to take. I would take that. Alright, so the next bar does go down. So on this bar right here, you got your stop to break even at that point. And look, we picked up 20 ticks on that. So it did go down. Almost got down to the swing low right there, but not quite. That's what I would have been using for a target. Well, on the NQ, I have a 45 tick target, but usually that's going to be a little beyond the swing low. Okay? That's what I'm looking for. So you go over one more bar, it pulls back up. Now we're not actually in the overbought, so you don't have a trade there, because you're not in the overbought. The next one's still not in the overbought, right? So no trade there. Next one, now you go up too high right here, alright? So you know a down close is going to be above the midpoint, so it's not a trade there either. Next one, you get down below the midpoint, but you're not coming out of the overbought, so it doesn't matter. Next one, nothing. Next one, nothing. Next one, nothing. So what we're looking for here is we're got a red background, so you want this to get up into the overbought. So every time I say nothing, it's because down there, the trigger is not doing anything. Right? Every one of those. There, now it's in the overbought, but you see how you had a blue bar on a red background? That means you have to wait for the bar to close and see if the bar is going to change, the background is going to change color, because you don't know if the background is going to change color or not. Right? When you have a blue on a red, you have to wait for the bar to close. You can't be proactive with the order like I am all the time. Put my order on ahead of time. You can't do that. So now the next bar, you have a blue background. So now what you're looking for down here is for this to get into the oversold and for you to have a close on or above the midpoint. So the next bar should close down. That's good. But now, the bar after that, look at where this bar is right here at 82. 82 plus 5 is 87, right? The midpoint is right here at 86. So if the next bar opened right here and went straight up, it'd close here at 87. Okay, if it went straight up, it'd close there at 87. That means it would be above the midpoint. So it'd come out of the oversold and close above the midpoint. That's what you want. If the next bar goes down more than 2 ticks, if the next bar goes down more than 2 ticks, and then it goes up and closes, it's going to close below the midpoint. Do you see that? If it opens, it goes down more than 2 ticks and goes up, it's going to close below the midpoint. And if it gives you the up close below the midpoint, it's not a trade you want to take. Okay? Do you see that? It's important that you understand that. So all this stuff is right here in front of you all the time. That's why we use range bars. The range bars gives you so much more information. You can see all this stuff a couple bars ahead of time. You can make up your mind a couple bars ahead of time of what you're going to do. So the next one, it goes way down and it turns into red background. So you got nothing there anyway. So now you're looking for it to get back up into the overbought. Again, look down here first. Looking for that to get back up into the overbought. So you got nothing. Until it gets up into the overbought, you have nothing. Now it's in the overbought. Where are you? You're nowhere near the midpoint. Okay? I mean price. You is what I'm talking about there. Where is price? Price is nowhere near the midpoint. So now what's it got to do? It's got to give you another up close. It's going to go sideways in the overbought. Alright? The worst thing that can happen right now for this market, for right now in this moment, is to give you a down close. Because it's going to take you out of the overbought, and then it's going to have to go way down, get into the oversold, then come all the way back up. So right now, so we to get 5 points on the NQ. It's 2 points on the S, it's 5 points on the NQ. I'll explain that in a minute, Sharon. Okay, let me just finish my stream of thought right here. So right now, what you're looking for right now is for this to give you an up close, and not this, but the next bar to give you an up close, or a bar that goes up and hits the midpoint and closes down. That's what you're looking for. Okay, so you get an up close that's not at the midpoint. But now the next bar, you see right here, you're overbought, and the next bar has the potential to go up and hit the midpoint and give you a down close and give you an entry. Why? Because it's 19 range bars. So we can go all the way up here and then close down, and close down right about here. Okay, I don't know what it does. It does not do that. It goes up a little bit. Right here, you see how it went up a little bit and it didn't hit the midpoint, and it came out of the overbought. So I'm not going to do a trade right there. We'll leave that one alone. Right? But you see what it does do when it comes out of the overbought, it resets the midpoint. Okay, now let me take a moment here and let me just finish this off, and then I'll explain to Sharon her question, because we only have a couple of minutes left in here that we're going to go through anyway. So now you're just watching down here, right? It's come out of the overbought, now it's going to go all the way to the oversold and come all the way back up to the overbought. You're not going to have a trade. So just watch the trigger. There, it finally gets into the overbought. So now it needs to come all the way out of the overbought. Now it's got one up close right here that got it out of the oversold. I mean, oversold, not overbought. It's got one up close here that's coming up next. It gets it out of the oversold, and it needs another one to get it up to the midpoint. Right, there's the first one. There's the second one. So, on this one right here, it actually gapped up to there. Right, it gapped up to there, and then it closed down. So that's not a trade. It happened so fast. It's not a trade that you would have taken. All right, but this is what you want to look for, though. You want it to go up there and close back down below when it comes out of the overbought. All right, but because of the gap, it didn't turn into anything that you can use. Okay, and that's pretty much it right here. You're still looking down here, you're waiting for it to get it back into the overbought, and there, it's finally in the overbought right here. This is a good spot right here. You see how this just came together right here? This is a great spot for you to have a trade. You got into the overbought, it's a little bit above the midpoint, so the next bar, if you get a down close on the next bar, it's going to be below the midpoint, it's going to come out of the overbought. This is a perfect spot to have a trade right here. Okay, bang, it didn't give it to you. Alright, so this bar right here, the way this came together, because it's exactly one bar length above the midpoint. So the next bar, if it opens one tick higher, it's not going to be a trade on a down close. Alright, if it goes one tick higher on the open, it's not going to be a trade on a down close, because it's going to be above the midpoint. And it was a whole bunch of ticks higher. Okay, so that turns into nothing, and then you get a blue background, and now you're looking for it to get into the oversold, which it does. Got to get down below there, and then give you an up close, and that's the end of the day. Alright, so Sharon, 5 points. This is a 19 range for a reason, okay? Here's the ES, right, and hang on, let me find the NQ one, and here's the NQ. Alright, so I use the 19 range because every point is 4 ticks. So 20 ticks is 5 points. Okay, Sharon, 20 ticks is 5 points. And what that means is, if I know what the top of the bar is, I know the bottom is going to be 19 ticks away. So I know if I want to sell on one tick beyond where the bottom of the bar is going to be, I'm going to use the 20th tick. That's 5 points. The 20th tick is going to be 5 points. That's on the NQ. On the ES, it's 2 points. The 8th tick is 2 points. Okay? That's why I use a 19 range. I mean, all the ranges that I use, if you look at this, the ones that have that are multiples of 4, That means there's 4 ticks to a point. The ones that have 10 ticks to a point, they're 1 less than a 10 multiple. The ones that have 4 ticks to a point, they're 1 less than a 4 multiple. Okay, it just helps you do the math. I mean, I know, I have, like, one of my degrees is in math, so this math stuff comes easy to me, but I know it's not that easy to a lot of people who are trying to do it on the fly. And that's why I'm trying to tell you, when I see it all happening, I'm trying to tell you what's going on. I'm saying exactly, where the order is going to have to be and where you're going to have to put this and that. And when it changes, I move it around, and I try to show you as much as I can. But that's what you're going to have to do. So making it the multiples that I use it makes it easier for you to do the math. Right? Isn't it easier to look at this and say, I need to go, if I know where the high is, like this bar right here, the current bar, it's got a low of 6150. It's easy to say, I want to go 5 points above that to put my buy stop limit order. 6150, it'd be 6650, right? Easy. But if you go to the 20th tick, then it'd be 6675. It's a little harder to put together and do the math. And with these guys, it's just 10 ticks. So it's easy to do these two. Alright, let me stop that recording. Oh, let me do one more quick part of this recording. To put this stuff on here, how long has this recording been? It's 11 minutes, crap. I'll try to wrap this up really quick. To put this stuff on here, all you have to do is put on the TV Trades range trigger. Alright, you go to indicators, have your TV Trades range trigger in your favorites like I do. To put it in your favorites, by the way, you're just going to put a star over there on the side, right here on the side. That'll put it in your favorites. Come down here, put in your password, which is going to change, by the way. You put in your password, hit show retracement levels, and down here, hit the 50% retrace, and that will put these guys on there, alright? That's all you have to do. Alright.